And on this idea, Cass,
yes,
are you trailing your stop with that momentum, or do you find trailing stops will sometimes whip you out?
You can use them, especially if you try to follow the entire trend. I personally don't. I use a dynamic exit. And an example of that can be, for example, let's say this was your 20-day high breakout. You can basically have a rule, okay, if we break the 10-day low.
Hello traders, welcome back to Simply Forex. Welcome to the Sit on Your Hands podcast, where experienced traders share their knowledge, skills, know-how and strategies with us. And if you stay till the end of the vid, our guest today is going to share a typical setup for him in the markets. So please welcome my guest, Cass. He has been trading for over 8 years now. He is a systematic mechanical trader and is the founder of cdfxtrading.com. So Cass, welcome. How are you?
Thank you for having me. I'm doing very good. Hope the same goes for you.
Yeah, all good. Thanks, Cass. And you're calling us from Holland.
I am. Yep.
Yeah. Okay. And in the center of Holland, you were explaining?
Yeah, exactly. Yeah.
So nowhere near the beach, basically.
No, unfortunately not. No.
Okay. All right. Cool. And yeah, like I say, Kaz, we've been getting a series of experienced, profitable traders on to our podcast, and we just want to sort of understand your trading stories so far, and dive into your strategy a little bit as well. All right.
Yeah. Perfect.
Normally, I would start at the very beginning. How did you get into trading? But I'm not going to do that. We are going to talk straight away about CDFX Trading, your company. How did this company come about? And what's a typical day like for you in the Forex market?
Yeah, so I started with trading about 8 years ago, and about 4 years later, give or take, that's when I started the company. It basically came out of a personal need I had myself when I was learning how to trade, because I was all alone, didn't know anyone that traded, did everything on my own basically. And that's where the need came from. So with CDFX Trading, I mentor people, but it's all one-on-one. So I don't have a big group. It's not, hey, here's a video course, good luck, and we never speak again. It's all one-on-one. It's all personalized. And yeah, the way my day looks is basically the first 3 to 4 hours, give or take, of the day is me trading or getting better at trading. And then in the afternoon, it's helping the traders I'm mentoring.
Okay. All right, cool. And the company started around 4 years ago. Is that when you started seeing some consistency and profitability in your trading? How long did that take for you personally?
Yeah, exactly. So it took me about 3.5 to 4 years before I actually was a profitable trader. And that's when I started my own company as well. I don't think you can teach people how to trade if you're not able to trade yourself. So that's why.
Yeah, of course. And we'll go into a bit more detail about your company, but getting to that stage where you were profitable, Kaz. Talk to us about that journey. What were some of the real tricky things that you personally had to overcome? Because it's different for everyone. Some people struggle with strategy, some people struggle with money and risk management, some psychologically. What were some of the things that you really had to overcome that you found challenging for yourself?
Yeah, that's a great question, because I think a lot of people nowadays struggle with the psychology, but for me, that was the easy part. Naturally, I'm very patient. If I don't have a trade for a week or 2 weeks, I don't care. So I got that sorted. I'm also very good at just basically blindly following a plan. So sticking to a plan was also not an issue for me. My main issue in the beginning was I was trading a discretionary, subjective trading style. And I did that for about 2.5 years. And that's when I came in touch with mechanical systematic trading. And that really changed it for me. So it was more about finding a trading style that actually fit me, than of course still doing the work to actually find a strategy that works. But that was the biggest hurdle for me. Yeah.
Okay. All right. Interesting. So your trading was almost, a bit discretionary, maybe a bit impulsive at times because of the fact that it was so discretionary, and
Yeah.
moving to mechanical trading obviously really helps with that. It's very black and white set of rules.
Exactly. Yeah. And when I think back, like when I was at middle school, high school, or whatever they call it in the UK or America, it's all different. But basically, mathematics, physics, I was always very good at those types of subjects. And that's basically the same as mechanical trading.
Yeah.
It's clear, it's following a proven process, essentially. Yeah.
Yeah. Yeah, and I would say there's two types of traders. There's traders that are very statistical, data driven and mechanical. And I would also say there's traders that are more, for the want of a better word, more artistic and relying on price action and less data driven, right? And there's room for both, right? Both traders can have success. So if we think about moving to a mechanical system that suited your personality, what were some of the key fundamentals of that mechanism?
Yeah, so I mainly trade breakouts. So I've always liked trading breakouts. At this moment, I trade about 4 strategies in different markets as well. And mainly it starts with a breakout, generally speaking. So I went from drawing levels on a chart to actually making a breakout very mechanical. That's where I first started, and then I continued building upon that.
Okay, so all the strategies are breakout or a mixture of different strategies?
Yeah, there is a mixture. Yeah, so I have a mean reversion system. I have a system where I take a breakout, but I generally exit within a day or two. And I also have a system where I really try to capture a multi-week trend. But it all starts with some form of a breakout, usually. Yeah.
Okay, interesting. And for me, I'm a very price action trader. So obviously that is quite discretionary and not, it can be mechanical, but not overly mechanical. Now, your systematic trading, is it based on price action fundamentals, or is it based more on indicator signals?
Usually a combination. So it can be indicators, yeah, but also, for example, if a candle closes above a certain defined level that I mechanically define. So I don't actually look at candlestick patterns, but more I use a close as an entry trigger, if that makes sense.
Yeah, okay, sure. So candles play a big part of this mechanical system.
Yeah, it's basically the entry trigger, but it's not that the profitability relies on it. It's just a way of entering in the markets for me.
Okay. And, I always have this, we've had fundamental traders on the show as well. And, some people put a lot of emphasis on fundamentals. Like me personally, I don't, but each to their own. Does fundamentals come into your mechanisms or strategies?
No, not at all.
No.
Nothing.
Okay. Yeah, good. Like me, we're on the same page there.
Yeah. The thing is, when I develop my systems, I do so first I develop it, but then as like the end step, I do a full-on backtest, which is 15 or 20 years back. All the news, all the events are inside the price. That's how I develop my system. And then if I see that a system continuously performs, like not every week or every month, but over the long period, essentially, that's fine for me. I don't pay attention to, hey, is today an interest rate session or whatever it's going to be. I don't care. No.
Okay, so big news coming out that day, you just trade your system mechanically, regardless of, because you've got a Fed interest rate decision later on, obviously.
Yeah, I do have to add one thing, and that is that I mainly swing trade. So if you trade mechanically on a 5-minute time frame, and in the next 5 minutes it's going to be interest rates, maybe you have to take it into account.
Yeah.
But since I trade higher time frames, mainly daily time frame stuff, if I use a stop loss, it's quite far away. It doesn't matter that much for the execution.
Okay. And did you find, again, it's about finding a system that suits you. Did you find the higher time frames suited you as an individual, or it was just getting you better results mechanically?
Both, actually. One of the reasons is that I believe in diversification, so trading multiple strategies across multiple asset classes. And I also believe that the lower the time frame, the more noise there is in the price data. Like it takes so much money to create a 1-minute bar, but it takes so much money to create a daily bar. There's more information, there's less noise inside it. So I think it's easier to find something that works on the higher time frames.
Yeah, and more reliable, right? There's
Yeah.
you know, a minute chart's you're gonna have 100 different structure breaks in a day, right? It's
Exactly.
you know, whereas a daily's a reliable time frame to trade.
Yeah.
All right, cool. And we will go into a typical setup later on, Kaz, and we'll take a look at that. Guys, while we got Kaz here, so please don't forget to check out all of Kaz's links below this vid. If you're interested in being mentored by Kaz or just want to find out what CDFX trading is all about, click the links below. And don't forget to subscribe, like, and share. Merci beaucoup. I also speak French, Kaz. You didn't know that, but...
Oh, didn't know that. No.
No. I don't speak French. I'm English, so it means you don't speak any other language whatsoever. It's terrible, really. But I just wanted to, you know, when we talk about trading, right, and you know, I do many a live stream, many interviews, right. Everyone talks about their trading edge, right, and it's, you know, your strategy, your plan, your money and risk management, and your psychology. If we go through each one of those individually and just sort of, you know, give our viewers some, you know, pearls of wisdom, some tips and advice on each one. So when it comes to strategy, we'll start with strategy. What should people be looking for in terms of a strategy for themselves?
Yeah, that's a good question, because I personally believe that most people they think it's because of their psychology, but usually I think it's actually because the strategy just isn't good enough, or they just don't have the data to know when it works, how it works, etc. When it comes to strategy, I think the easiest trading style to start with is breakout trading, and then on a daily time frame with an average holding time of a couple of days. Because basically, when you take a look at the types of trading styles there are, you can trade mean reversion, which is basically if there is a range, you trade the bottom of the range to some type of average or to the top of the range. You can trade trends, which basically is if a trend starts, you try to follow the entire thing until the end. And then in the middle, you have breakout trading, which is basically capturing the initial move after a breakout and then getting out before there is some type of pullback.
Yeah, sure.
Each of those trading styles have their pros and cons. If you take a look at following the entire trend, yes, you can have a huge risk to reward, but your win rate is going to be low. If you are a learning trader, it's quite difficult to mentally deal with a low win rate.
Yeah.
If you trade just breakouts and only capture the initial moves, your win rate is about 45-55%. That's mentally a lot easier. So I would personally start there. Like, if you're not profitable yet and you want to find your edge in strategies, I think breakout trading is going to be the best thing.
Yeah, and I couldn't agree with more. You know, when it comes to your win rate and your risk to reward and everything, you need to be so aware of the statistics you're producing in that respect. You know, one thing I struggled with was my win percentage. Now, I have a reasonably high win percentage because I'm not in the trade long and just looking for a small move.
Yeah.
Whereas if you catch the bigger moves, you're going to have bigger reward to your risk, but you know, there's a lot of psychology involved in that. Yeah, for sure.
Exactly.
Couldn't agree more, Cass. And then I imagine the people you mentor, right, on a daily basis, I imagine a lot of them are part-time traders, right? They've probably got a
Correct.
9 to 5 and they're doing trading, you know, when they can and when they can fit it in around their life. You know, what again, you know, what tips and advice can you give to part-time traders?
Stick to the daily time frame, or at least the higher time frames. So most of my stuff is daily time frame. It doesn't really matter if you enter a couple of hours before or a couple of hours after. So you give yourself a big window of when to enter, essentially. The next step is also going to be automation. So a couple of my systems are fully automated, to the sense that they identify the trade and they take it and they exit, etc. But I also have a semi-automated system that basically generates a signal, but I still have to put in the order. So I think if you want to combine it with a day job or, you know, kids during the day, whatever it's going to be, higher time frames plus automation is going to be the best thing.
Yeah, definitely. You can't be scalping the 5-minute chart on a 9 to 5, and it's all about speed of execution. And if you're trading the daily, like you say, those couple of hours, some days may get you in at a slightly worse price, but I imagine a lot of the time, just waiting for a couple of hours gets you in at a better price sometimes. So that's going to work itself out, right?
Yeah, true.
Yeah. All right. So really good advice then in terms of strategy and finding something that suits you as a trader, right? I think that is the holy grail. This word holy grail gets floated about, but definitely that you've got to find something that suits you. And then, if we move on to the next part of our trading edge and we think of money and risk management, again, what advice and tips do you give on that, Cass? And, and yourself, what are you risking per trade? Like 1%, 2%? How does that work?
Yeah, so it really depends on a lot of things, how much you're going to risk. So it's your personal risk appetite. It's your type of strategy. It's like the maximum drawdown a strategy had and adding a threshold to it, because usually the maximum historical drawdown is not going to be the maximum drawdown you're going to get live. It depends. Do you trade your own money? It depends. Do you use these CFD prop firms? So there's a lot of things that go into it. I would start with lower risk. You can always scale up, especially when you first get used to your strategy, it works, then you kind of dip your toe into live trading. Just start small, get those reps in essentially, and then you can always scale up. I think that's the best thing. I personally, I have a few high risk accounts with prop firms, so I risk about 1%. On other accounts, I risk a 0.5%. It really depends on a lot of things. So there's no clear cut, okay, risk this amount per trade. No.
Sure. Okay. And you brought up an interesting point there, Cash. Because you need to scale up as a trader, right? Otherwise, you're just constantly going to be treading water, and you'll never make any real profit, and you won't be able to do this trading malarkey full time, right? So you need to, how aggressive do you need to be when it comes to scaling up? And is there something you tell your traders? You do it incrementally? Is there a reward-based system with, upping trade size? How does that work for you and your traders?
So it basically depends on which path you want to go. So on average, if you can make 20% per year on average trading traditional markets, you're actually doing really well. But if you have 10K of starting capital and you make 20%, that's $2,000. That's not going to pay all your bills for the year.
No.
So if you want to trade your own capital, you need a lot of capital to actually make it worthwhile and to get that full-time income. The other part is trading with other people's money, and the CFD prop firm space nowadays offers good opportunities if you know what you're doing. So a lot of people just go to these firms, buy an account, lose, buy again, lose. So that's not the right way to go about it. Usually when I work with people, we go for the prop firm space. The reason is that if you know what you're doing, you don't have to risk a lot of your own capital to get access to a part-time or full-time income. And we gradually scale that up. So we start with the smaller accounts. Once they pass that, they get another one and they get another one. And that's how they scale up. It's going to take time. But in my opinion, if you know what you're doing, it's less risky than just putting in 200K of your own capital, because it's 200K with one broker. There is broker risk there. So that's why. That's how I would do it.
Yeah, sure. And then, we have a lot of guys on our channel who trade prop firms, and it's an interesting space. And, it is a great way of getting capital for a relatively small amount of money, right? It is. Yep. But with that comes, tight parameters on how you can trade. And is that the reason why you're trading 0.5% or 1%? Is that the reason, or it's just that's the way you trade and lower risk is best?
That's mainly the reason. So with these prop firms, they do indeed offer capital if you pass, but there are rules you need to follow. A big mistake a lot of people make in the prop firm space is, okay, you get a 100K account, so they're going to risk based on 100K. But if you lose 10K of that account, you're already out. So you really want to lower the risk and give yourself room so that when you have a drawdown, you can actually survive it. Because if you risk 2% a trade and you're out in 10% drawdown, it gives you 5R to lose. Like a 5R drawdown is around the corner. It happens quite often.
Yeah, sure. And worth pointing out there, guys, with one of our partners, Blueberry Funded, we do have 25% off any prop firm challenge right now. So please go check that promotion out. All right, then, Kaz. So yeah, we sort of looked at strategy. We've looked at money and risk management. Now the psychology, and I appreciate this is broad, right? You know, psychology, the brain. Mine works most days, so that's a good thing. But you know, it's such a broad subject, and if I just say give people advice, it's quite difficult. But you know, you said that you found the psychology side of things quite easy, and how do you pass that on to others? You know, how did you find it easy? Because a lot of people struggle with it.
Yeah, so I think a part of it is just me, is maybe genetic, so I cannot pass that through a screen to someone. Like I'm naturally very patient, and that's a skill some people have and some people don't, and really have to work for it. I also believe that a lot of people overcomplicate trading psychology a lot. So what I noticed, so first I was discretionarily trading, and then I went to mechanical data-driven trading. I noticed a lot of my psychological issues basically being gone. And the reason for that is that when you have a strategy and you know it has been working for 20 years, that's going to give you a lot of confidence, and confidence is directly connected to trading psychology. So that's the one thing. The other thing is that if you know your strategy inside out, so you know when it makes money, but you also know when it doesn't make money, that's going to help massively with losing streaks. The next thing again ties into strategy. If you exactly know when to enter and when to get out, and that it also has been profitable, you don't have to like stare at a chart and be like, oh, is this a trade or not? Should I take it? You know you should take it, or you know you should skip it. So I think a lot of psychological issues actually come from the fact that people never tested the strategy, it's not clear enough, or they don't have enough confidence in it. And if you fix that, usually a lot of psychological issues will be gone, and then you have like maybe 10% of like all psychological issues left. You can work on those, and then it's fixed basically.
I would say the more mechanical the strategy, the easier it is on your psychology, right? There's less gray area, there's less subjectivity, you know, should I, shouldn't I? There isn't any of that, right? That's the setup, take it, right? So yeah, that would get rid of a lot of psychological issues. Now, like with any strategy, you know, you're going to have a few losing trades. You know, again, I don't care about the result of my trade, right? I just care that I entered the trade as per my parameters. But if you've had 5 losing trades, you know, it will get to you a little bit, right? We're only human. So how can we help people overcome those losing streaks? Because I know a lot of new traders, they have a losing streak and change everything. They're like, oh my God, I've got to change this, change that. I'm going to, you know, and then before they know it, they're lost. So how do you manage losing trades? Because it's part of any system.
Yeah, I think it's going to be accepting, because no matter what strategy you trade, high win rate, low win rate, you will always have losing streaks. It's part of the job. You cannot remove losing streaks. I also think it's like, we're not robots. I think it's fine if you lose 5 or 10 times in a row to feel like, oh fuck, this is not what I want. That's fine. The issue is if you act on that feeling, and you need to find a way to basically create distance in, okay, I feel I lost 5, 10 times in a row, I want to make it back, to acting on it. You want to create some type of distance between that. And it also ties back to strategy. So I have a trend following strategy in crypto. The win rate is about 25%. So if there's a big trend, I'm in, I make money. But for example, last year, Bitcoin was in maybe a 6-month range, something like that. That's 6 months of me losing money on that strategy. So
Yeah.
and I don't care because I know when the strategy works and when it doesn't. So again, it
Yeah.
ties back to knowing your edge. That's really
Yeah.
important.
Yeah, totally. And it's a crazy thing, trading, isn't it? Like, let's say your win percentage is 60%. You are still wrong 40% of the time. Let's say it's 30%. You're wrong 70% of the time. There's no other job in the world. If you're a doctor, you can't be wrong 70% of the time. You're going to have
No.
just dead patients everywhere, So it's a crazy world in that respect, trading.
Yeah.
Yeah, definitely.
Yeah, and I think that also makes it difficult because you need to let go of that need for certainty. You can create certainty in your trading by having a clear plan, etc., but there will always be uncertainty. And I think people are too focused on getting the certainty in trading that they get with a regular job, and that's just not going to happen. So
Yeah.
I had a lot of beginning traders last year that wanted to be mentored, and a lot of issues I found there was basically they do their analysis, then it's a losing trade, and they think I made a mistake in my analysis, but that doesn't have to be the case. But that's the need for certainty they want to find, and they need to let go.
Yeah. Yeah, that's a big problem for any new trader, right? And your whole life, tests at school, whatever it is, if you're only right 60% of the time, you're typically not doing well in the test.
Yeah.
Whereas at trading, that's a brilliant win percentage. You'll be doing just
Absolutely.
fine, So yeah, and yeah, there's so many aspects to psychology, and we sort of covered the trading edge now, right? And if you had to, I always ask this question. It's my favorite question, Cass. I've got to ask it. But if you could write a letter back to your trader self when you first started out, what would that letter say?
Oh wow, that's a very good question.
I told you it's a good one, Cass.
Yeah,
It's
it's a
my
good
favorite
one.
question.
A couple of things would be on there. The first thing would be don't follow people that are not profitable themselves. So I'm not like, especially here in the Netherlands, a lot of people are teaching trading, but they secretly cannot trade themselves.
Yeah.
And I find that they give a lot of misinformation that sounds good, but actually is quite useless. And I was following a lot of those people back in the day, wasted a lot of time on that. So I would like not do that.
Okay.
The other thing basically is going to be go for the low hanging fruit. So with trading, I see a lot of people complicated stuff, trading the most difficult markets. I was doing that as well. I would just start very simple in the easier markets, such as crypto. That if I could go back, that's what I would do.
Okay. All right. Yeah. Good advice, Cass. And the easy market's crypto. I'm not sure about that, Cass. I stay away from crypto because I find it so open to news swings. Like Trump comes in, he says we're going to be the center of Bitcoin. Bitcoin flies up, or it's so.
Yeah, well, let me clarify. Let me clarify because you are correct. Crypto is highly volatile, and volatility, if you know what you're doing, brings better opportunities compared to a slower, less volatile market. So that's the reason I say go for crypto, especially if you trade breakouts, which is my preference. Crypto is a great place. It's a lot easier to make breakout trading profitable in crypto compared to FX, for example. So that's why.
Yeah,
but
there's good momentum.
I do agree. It goes up and down, up and down. I do agree. But if you know what you're doing, crypto is easier than another market.
Yeah, when it does move, it moves, and you're as a breakout trader, you want that momentum, obviously.
Exactly.
You don't want to retrace, right? You just want it to.
Exactly. Yeah. So for momentum trading, crypto is really nice. Yeah.
Yeah. Okay. And I know we sort of done this back to front, Kaz. We sort of started with what you're doing now with CDFX trading and mentoring and everything. And you've wrote this letter back to your trader self when you first started. How did you start? What was it? Something you always wanted to get into? Was you doing something completely different? How did you get into trading?
Well, back in the day, I was studying mechanical engineering for the sole reason that I was good at mathematics and physics, but I didn't actually know what mechanical engineering was about. And after about 6 months, I figured out I didn't like it. But at the same time, someone in my classroom was like staring at a brokerage platform. So I was like, hey, what's that? What's that? So he explained it a bit. And then I thought, okay, that's quite cool. So I bought my first book, and I started studying trading. At the time, I should actually be studying mechanical engineering.
So everyone in your class, nobody was learning mechanical engineering. Everyone was learning
everyone
trading,
was doing something else.
So did anyone qualify in that class as a mechanical engineer?
I don't know, maybe like 10% or less.
We're talking about percentages. That's not a good percentage for that.
No,
school,
it's not.
that university.
Yeah, so that's how I got into it. And then I quickly realized, like, okay, I need to drop mechanical engineering. I don't like it. I might be good at it if I put my hat to it, but I just didn't like it. And that's how I went into trading. Basically, for a couple of years, just putting in 8 hours a day, studying, having a side job at the time. I still lived with my parents back then, so I didn't really have that much like responsibilities. I could put in a lot of time, and that's how I got started.
Okay, cool. And I imagine, being, the fact, and going back to your original point about finding a strategy that suits you, you are maths driven, physics background as well, it lends itself to mechanical trading, right? It's finding that thing for you, right? Maybe if you was doing an arts degree, it might be, you might have a completely different approach to trading, right?
Yeah, absolutely.
Yeah. Okay. All right. So brilliant. All right. Well, so I've really enjoyed, talking to you, Kaz, about your journey and what you're up to now. And yeah, brilliant to hear from you. And guys, if you like what Kaz has to say, please go check out the links below, cdfxtrading.com, and give Kaz a visit. So Kaz, we've sort of talked around your strategy and what it's about. So it's mechanical, some of it's breakout. You've got a few different strategies there, but if you don't mind sharing your charts, and we'll take a look at a typical setup for you.
Yeah, sure. Absolutely.
Yeah, and guys, also please don't forget to subscribe to the channel, smash the notification button and smash the like button. Please don't forget to join our trading community. We have a free Discord channel. You can talk to like-minded traders, share knowledge, ideas. So please come and check that out. Also, guys, please don't forget to check out our website. If you want any premium trading education, go to www.simply-forex.com. Check it all out. Right, Cass. Okay, so yeah, we can see your screen there. If you just sort of talk us through what you look at in the markets. I can see you've got Bitcoin up here.
Yeah. So, like I said, I have a couple of trading styles, and one of those trading styles is trend following in crypto markets. Now, I'm not going to give away the exact rules here. I am going to give away what goes on behind the scenes, essentially.
Okay.
So what my crypto trend following strategy does is it's not going to capture the entire bottom. So if we take a look here, end of November 2022, that was the bottom of Bitcoin. Now, my trend following strategy will probably get in about this area. So I'm not going to buy the exact bottom. That's a mistake a lot of people I see make, is trying to pick the bottom, which is obviously very difficult.
Yes.
I'm also not selling at the top. So this was the top, about 110K. My exit signal came about here. So I'm not like trying to pick the best areas. I'm trying to capture the area in between. And then, for example, in this period, so I had an exit here. This right here was my final exit. But I had multiple exits and entries here. And that ties into what I said in the beginning, or at least a couple minutes back, was that if you have a trend following strategy, it's going to be very good at capturing moves like this. It's going to be capturing moves like that and that. But during this entire period, it's just going to lose. So I had a massive losing streak here. And then one run makes it all good. Yeah. So, and the way I follow these trends, you can basically go in a couple of ways about it. So if I'm going to draw a range here, and we have a high of a range, and you can define this in multiple ways. So a mechanical way about this could be the highest price of the last 20 days, for example. If we break the highest price of the last 20 days and we close above there, so that ties into the candlesticks that we spoke about earlier.
Yeah, so
It
you get a
close
nice
above.
bullish candlestick, break that level.
Yeah, so let's say this is a 20-day high. We get a bullish close above the 20-day high. That could be a trigger for a breakout. And then you essentially try to follow the entire move that comes, including all the pullbacks. And then you usually get some type of reversal pattern, and then a trend following system is going to get you out here. Now, you can also use moving averages for this. So if you use a moving average crossover, generally you're going to have some type of crossover in this area. So it's not going to get you the bottom, but it's going to get you in when most likely a trend is going to continue. But of course, it's not certain. So that's two ways you can go about it.
And on this idea, Cass,
yes,
are you trailing your stop with that momentum, or do you find trailing stops will sometimes whip you out?
You can use them, especially if you try to follow the entire trend. I personally don't. I use a dynamic exit. And an example of that can be, for example, let's say this was your 20-day high breakout. You can basically have a rule, okay, if we break the 10-day low, so a 10-day low is going to be trailing here somewhere. Let's say this is your 10-day low. If we break and close below that, I'm going to exit here. So that's an example of how you can ride most of the trend. That's the trading style I run in crypto.
Do you, obviously, because your style is very mechanical, and
yeah,
you know, do you, on that big move up, you know, you may well have daily structure breaks to the downside, right?
Correct.
Does that factor into your exit, or you're just like, nope, it's just purely mechanical, I don't care, we've had a daily structure break, I'm just
yeah, that's a good point. I don't care, basically.
okay.
I just
Fair
follow
enough.
I follow my plan. Like everything I trade has been tested for, like in Bitcoin, you cannot go back 20 years, but in other markets, I go back a lot. So I just know it works over time. So I rather spend the time that most people would monitor a trade, look for breaks of structure, etc. I rather spend that time in developing new strategies than actively monitoring stuff. So that's just my way of doing things. It's not wrong to use trade management, absolutely not. But I just prefer to keep it very simple. So I get in an entry here, try to ride the trend, and get out somewhere here if it goes the other way. That's what I do here. To clarify,
sorry, Cass, are you using moving averages on that move up? If price retraces to 20 moving average, 10 SMA, or whatever you might, and that's a bit of an indicator, right?
Yeah, so you might have your moving average running here, and then you might have your price here, and then, for example, if we go below, you could have your exit here. Yeah, correct. Yeah, and I'm using a moving average in one of my systems. Yeah. This is your typical trend following, and like we said earlier, this is one of the methods I have, but it has a 25% win rate, so you're going to lose a lot of times in a row. I don't mind because I'm decently experienced, I like to believe, but also because I trade multiple systems. If this is your only system, it's going to be quite difficult mentally. So another system I have is that, okay, we break out. Generally, you have some type of impulsive move, especially in crypto. But generally speaking, after a day or 2, 3, 4, you get some type of retracement, some type of pullback. With this trading style, the entry is roughly the same. So it can be a breakout of a resistance or a 20-day high. But what I'm trying to do here is only capture the initial burst of momentum and then get out. And this type of trading style has a higher win rate, so it evens out the other trading style. But of course, you don't have the big targets. You don't capture an entire trend. But the benefit here is that if I trade like this and the trend doesn't continue, this style has a profitable trade while the long-term trend following didn't. That's why I believe in diversification, trading multiple styles. And this is the style I always recommend people when they're not profitable. Aim for this. It's, momentum has been researched quite a lot academically. It's proven to work. It's robust. It has been there for a lot of years. You don't capture the entire trend. Your win rate is decent. this would be the easiest money, essentially, as far as that goes into trading.
Yeah. And again, will suit some people, especially new traders, right? Then they can't hold trades, or they see a bit of profit and they want to close a trade. And, a 25 win percentage might be very difficult for some people, right?
Yeah.
And, it's something I struggle with. I look for a high win percentage, but I'm taking profits at 1:1, right?
Yeah.
So, it's all up to the individual and what best suits them.
Absolutely.
Yeah.
Good point.
And with this strategy, just a question, Kaz, once you get to this point and, could you not take partial profits and follow and leave some profits to take advantage of the higher time frame that you were speaking about?
Yeah, that is possible as well. That makes it a bit more complicated to run an objective backtest. And that ties again into me liking to keep things simple. Then I'd rather have two simple systems than one that scales out here and scales out there. It's definitely doable. I think it's going to be profitable as well, especially in Bitcoin and some other cryptos as well. You can do that. Yeah, absolutely.
Yeah, but like you say, not as simple. And I couldn't agree more. Simple is best, right? Human nature is to confuse everything, right? And make it 10 times more difficult than what it needs to be.
Exactly.
Just ask my wife. She will tell you that. I'm only joking.
Hope she's not watching.
No, she doesn't support me at all. No, I'm only joking. Wife, I'm only joking if you're watching. Okay, Kaz, and I really appreciate your time today. Thanks for sharing a bit about your strategy and the big moves that you're looking to capture. And there's many ways to trade, right? There's many ways. I always say to skin a cat, but you shouldn't skin cats, viewers, right? There's many ways to cook an egg, right? And this just goes to show, right? You can have a very low win percentage, but a great return. You can have a high win percentage and just as great return, right? It's all finding something that suits you in the markets. Yeah,
absolutely. Yeah, I really agree with that. And there are multiple trading styles, and see what's out there, basically. See what works, see what other people are using profitably, and then ask yourself, okay, does this fit me? 25% win rate is not going to fit a lot of people. Don't trade like that, because profitable trading is profitable strategy plus successful execution. And if your win rate is low and it's going to make your execution worse, you shouldn't do it. Then trade a style that is going to fit you. That's really, really important.
Yeah, couldn't agree more, Cass. Well, guys, like I say, if you've enjoyed what Cass has to say, I certainly have enjoyed talking to Cass, then please check out all his links below. Go check out his website, cdfxtrading.com, where he mentors traders. Cass, thank you very much for your time, my friend. We'll have to do this again sometime. Really enjoyed talking to you. And thanks for joining us on the Sit on Your Hands podcast.
Thank you for having me. I really enjoyed it as well. Yeah, thanks.
Good. Brilliant. Thanks, Kaz. See you soon.